After 550 basis points worth of rate hikes, the S&P 500 is not far from its 52-week high, or pretty much from its last high of in January 2022, around 4,811. Pretty astonishing. It defied all expectations, any macro prediction for the people that were calling for a recession, including myself. Even the Fed right now is not even calling for a recession anymore. And for a lot of us that saw that maybe something bad would happen if the Fed is raising 550 basis points, maybe the S&P would go down. But it still has actually not happened, but it could still happen, because if you look at history, most of the decline in the S&P 500 actually happens after the Fed pivots. And this is because the Fed normally pivots whenever something bad is happening. They did pivot in 2008, or actually early 2009, because we had the financial crisis, something that was happening. We had a big pivot in March 2020. They were cutting rates to zero and doing stimulus. This is because we were locked down. So normally the Fed pivots whenever something bad is happening, and this thing that is really bad is normally bad for stocks anyway, which is why stocks tend to decline the most after the Fed pivots. But maybe this time is different, and the whole macro picture has been very confusing, which is why I've been focusing more on actually finding buying opportunities outside the S&P 500, and some of them have actually started to play out. I'm going to discuss them in this video. I'm going to also discuss some new opportunities and areas that I'm seeing in this market. Now, if we look at how the S&P is behaving, this is something I talked about, that is actually pretty close to what the DAX actually did before the S&P. I mean, we have a war in pretty much in Ukraine. I mean, we have a lot of things, bad things that are happening in Europe, but yet the DAX is sitting pretty close to all-time high, which is very, very astonishing. And this is how the S&P 500 is pretty much behaving. But if you look at the performance of the S&P 500, most of it is actually due to the Magnificent Seven, which are Meta, Amazon, Apple, Microsoft, Google, Tesla, and of course Nvidia. It got around 58% of all the gains, 58% from those 7 stocks alone, which brought the S&P up 15%. This is as of June 23rd, which is around a month old. So the entire S&P is up 15%, but the remaining 493 stocks were only up 4%, which tell you a pretty crazy story. And this has a lot to do with a lot of things, but it also due to a lot to the AI story, because these kind of big tech companies are exposed to AI. We also have seen a lot of other kind of smaller cap companies like maybe Palantir, mid cap, kind of large cap kind of stocks. They have been going up just based on the AI story. But the other companies that have no AI stories, they have not been going up, which has been very, very interesting to me. And I do believe that AI is the future. Most of us know that, but I believe the market is getting a little bit overstretched, in the middle. Every single year we have something that people get excited about. I was joking with my friends in my own investment group about the metaverse. You remember when the metaverse was pretty much the whole story and everyone was excited about the metaverse? Well, now no one talks about the metaverse anymore. Everyone is talking about AI, because this is something that's exciting a lot of companies, that's causing a lot of stock prices to go up. It was the metaverse before, and now it's actually AI. But look at what happened to a lot of metaverse investments that people got excited about. One of them was some kind of coin called Mana, which is called some kind of a Decentraland or something crazy. This coin went from around 53 cents to around $4.40 whenever people were so excited about the metaverse, and now it's going back to 38 cents. And it's the same thing with a lot of the EV stocks. It's the same thing with a lot of other kind of stocks we had before. People are always excited about something, and most of the people that get excited is normally after something plays out. But we did talk about a lot of other stocks, and you're seeing it with many stocks in the S&P. They are starting to go up. They are starting to catch up to the S&P 500. And this is something amazing to see, because this is where I'm positioned. I am not positioned in the Magnificent Seven. The only one I bought was Google. I always said Google and Meta are the best of the Magnificent Seven. And now I believe Google is still one of the most undervalued ones of the Magnificent Seven kind of stocks. I really like Google even after it went up. I did a video on its earnings. But we look at a lot of the other companies, they are starting to catch up. Something like UNP, Union Pacific. Union Pacific is up 15% on the month. CVS Health, which I have done tons and tons of videos on CVS Health. I talked about the healthcare stocks being undervalued. this is where I said the opportunity is. CVS Health is up 10% on the month. United Health is up 5% on the month. And even Realty Income, which the ticker is O Realty Income, is up 6% on the month. And this is a REIT, a dividend stock. It doesn't go up 6% on the month. But a lot of the other kind of names are starting to catch up to the Magnificent Seven, which is why I still believe the opportunity is in a lot of the names that are outside the Magnificent Seven. There are amazing opportunities in this market. I mean, you could look at this chart from Koifin, which actually says that, the percentage of stocks, within the 52-week high, most of them are nowhere close to their 52-week highs. There's so many opportunities in this market. I'm buying a lot of companies that are not in the Magnificent Seven. I'm going to talk about some of those industries in this video. But one area we have been finding a lot of opportunities, and this is a place where I would encourage you to look at, and this is in the TSXV. This is the TSX Venture in Canada. And this is a chart from someone on Twitter which shows something pretty amazing. This is the volume of the TSX in Canada. And the volume, as you can see on this bar, I mean, it's the lowest since it was in 1999. I mean, there's no volume on these stocks. They are very, very illiquid. No one is touching them, which is why in my own investment group, we've been finding a lot of micro cap stocks, small cap stocks on the London exchange, and actually in some in Sweden. We've also been finding a lot of them actually on the TSXV exchange, or TSX Ventures in Canada. I would highly encourage you to look over there and look for a lot of those small and micro cap kind of stocks. You're going to find amazing, amazing opportunities. If you could put it on a screener, I can't really talk about them on the channel because I can get in trouble, talking about $50 or $60 million market cap kind of companies. But the second best industry to be invested in right now, this is where I'm finding all the opportunities, and it's actually the retail stocks. I'm finding a lot of value in the retailers. Yes, it's boring, it's not as exciting as Nvidia, but I've been finding a lot of decent opportunities, and I believe the retailers kind of stocks are going to be the outperformers in 2024 and maybe even in 2025, and potentially outperform a lot of the Nvidia and a lot of the stocks that everyone is excited about. But pretty much no one is excited about retailers. And this is something that Joel Greenblatt actually said. Most of you are familiar with him. He wrote the little book that beats the market. A lot of you know this book. And this is what he said. He said, the time to buy retailers is when everybody knows they are missing on comp sales, have inventory issues, etc. You know what? If she knows it, then everyone knows it. This is the time you have to be looking at it and thinking like a contrarian. And this is the issues that a lot of the retailers have been having: bad comp sales on their 2022 numbers, higher kind of inventory kind of issues. A lot of them are trading not just at 52-week lows, but pretty close to 5-year lows on a lot of those companies for pretty much no reason, and everyone is hating on them. And this is where I'm finding a lot of the opportunities. I talked about them on the channel. One of them, which I still believe is a good opportunity, is actually Ulta Beauty. Even though the stock has rallied a little bit since we looked at it, but it's still sitting at 17 times earnings. 17 times earnings is the lowest it was trading at pretty much since 2009. The lowest it's been trading since 2009 right now for an amazing company like Ulta Beauty, which I did an analysis on. You could go and look up my name and put Ulta Beauty. You're likely going to find my video on it. But this is an amazing, amazing company trading at 17 times earnings with a pretty more resilient than you believe business model, in my opinion. So I'm finding a lot of opportunities in the retailers. I'm finding a lot of opportunities in the smaller and micro cap kind of stocks in Canada, in Sweden, and even some in London, in the UK, a lot of good opportunities. So I don't know why anyone would be upset of missing the bottom. You only miss the bottom maybe on the Magnificent Seven. And I have no idea why most retail investors are so obsessed with these stocks. They're so obsessed with Tesla, with Nvidia and Apple. I mean, everyone owns those stocks. You're not getting any kind of an edge or any outperformance if you're just going and buying them. Yes, they did amazing in 2023, but this is not going to be the case every single single year. And in my personal experience, I would much rather bet on a micro cap stock becoming a small cap stock, or a small cap stock becoming a large cap stock, than a mega cap stock sitting at 3 trillion becoming a 35 or 40 trillion dollar market cap. I mean, this makes much more sense to me, but people are still obsessed with them for no reason, in my opinion. So this is where I'm finding a lot of the opportunities, and I hope you're looking over there. I hope you're going to consider looking over there. So thank you for watching this video. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.